So the numbers are in, and the world has chosen to buy gold. China, Poland, and Singapore, they are all the biggest buyers in 2023. And we must talk about this. Why are they buying? And is this the best time to stack more gold? Now, while we live in a world controlled by the US dollar, debt dominance is starting to decline and the drop is accelerating. But if you're an investor or central bank, there aren't many other places you can go. Other currencies are unstable, and stashing your money in US bonds isn't a long-term solution either. US government spending isn't stopping, and the selling of treasury bills have gotten out of control again. Since the start of 2023, America has been issuing more T-bills to the point it's almost 22% of total US debt. The level of borrowing is well above the recommended range, and this is a crisis because Joe Biden is borrowing money at over 5% interest rates, which is pushing the US economy closer and closer towards eventual default. And we are heading off a cliff, guys. US interest payments have hit $1 trillion a year, and this can't continue forever. Now, just recently, the Fed Chair Jerome Powell, he went on 60 Minutes and dropped a bombshell interview on the US debt disaster. And we must pay attention to this because he's hinting at an eventual default. The US federal government is on an unsustainable fiscal path, and it just means that the debt is growing faster than the economy. And if Powell himself sounds like a fearmonger, it means that the debt crisis is really serious. If your debt is growing faster than your economy, the only path left for America is to inflate the debt away through the Federal Reserve. In other words, massive money printing to pay off all the bondholders. And that's the end game of holding US dollars and treasuries. It's just a matter of time when this will happen. It's not a matter of if anymore. Central banks inherently know the game being played here, and they are beginning to diversify away from dollar assets. Today, only 30% of US treasuries are held by private investors and central banks. You contrast that to 43% a decade ago. It's very obvious that money is flowing away from US debt. And where is it going to? The money is headed to gold. And ever since the US sanctioned Russia, this has only ramped up central bank buying as well. Countries all over the world, whether they are friendly, neutral, or against the US, they are parking their money in gold bullion. In 2023, China bought the most gold, coming in at 225 tons. Poland is second with 130 tons bought. Singapore is third with 76 tons of gold. These three countries are very different from each other, but they all agree on one thing, and that is the need to move away from dollar assets and hedge themselves with physical gold. And as we move towards 2024, we can expect continued strong demand from central banks and all the private investors. We must understand why countries are hungry for gold and why the buying isn't going to stop. Now, China buying gold isn't a surprise here. It revolves around dumping treasury bonds to sanction proof themselves from the US. China's gold purchases soared by 30% in 2023. Their central bank is buying more, and individual investors are also stacking more gold as well. The motivations for the PBOC are clear. So let's talk about Chinese investors because local demand will continue to stay strong. Just imagine you're someone with money to spend in China. There are few avenues available to stash your money. Every asset class looks uncertain, and when you're saving for the future, you're looking for certainty. Firstly, the property market in China isn't a place to invest. We all know that. The bubble is deflating, and if you buy real estate as an investment, it's almost guaranteed you lose money down the road. Since the middle of 2021, home prices across China have been dropping almost every single month. Whether you're in a tier 1 city like Shanghai or a tier 2 city, home prices are still trending down. In November alone, resale homes have dropped by another 0.8% across 69 out of 70 cities. It's a nationwide deflation. So real estate as an investment is out of the equation. It's just crazy to take on a mortgage and pay the interest expense when home prices are still crashing. So that eliminates Chinese real estate, right? The next natural option would be the stock market, but we all know what happened over the past few weeks. From the peak in 2021 till today, Chinese stocks have lost almost $6 trillion in market value. We are now at a 4-year low, hitting levels back in the 2020 lockdowns. China's economy is undergoing a big shuffle away from real estate to technology and industry, and no one has a crystal ball how long that will take or if Chinese stocks could go lower. The market could also simply just trend sideways for years. Now, it's great for speculators, but if you are a saver, this is a nightmare scenario for you. If you're looking to preserve value, the Chinese stock market is just too volatile. and that leaves gold as the only viable option. And the Chinese people, they know that, right? Their options are few and far between. We can expect investors there to keep piling into gold because it's the only logical choice left. The performance of gold in yuan has outperformed every asset class except for the S&P, which is trading at record valuations. In other words, US stocks are overpriced, which is another risk we must talk about. Gold has outperformed everything, including local Chinese bonds and global equities. And don't even talk about US treasuries, right? That asset class has collapsed thanks to the rate hikes. It is not just China's central bank that will keep buying investors on the street, they will be snapping up more gold as well, and this adds a big tailwind to gold prices. Let's talk about Poland as well. Now, this is an EU country, and the first thing in your mind is probably why are they buying gold? Shouldn't they be invested fully in euros or US Treasury bonds? Now, Poland is part of the EU and the collective West after all. Countries like the UK and the US, they haven't bought gold in decades, so having an EU country stacking gold is quite a big deal. Since 2021, Poland had a plan to buy at least 100 tons of gold worth over $5.5 billion. Gold is an asset that many EU countries have as a reserve. Germany themselves hold over 3,000 tons, while France has over 2,400 tons as well. But for Poland, the situation is quite different. Unlike the rest of the Eurozone, Poland uses their own currency, and that means they are outside of the ECB's control when it comes to monetary policy. According to their central bank, only our own currency allows us to conduct our own policy, which we consider to be the best for Poland's development. We can hoard gold, lots of gold. Poland doesn't fully trust the ECB. They don't believe in the euro and would rather use their own money while buying gold as a store of value. Firstly, the euro as a currency has been dropping against the dollar. Over the past 5 years, it has dropped nearly 5% against the reserve currency. In September 2022, the euro reached parity with the dollar, so 1 euro equals $1, and this was a wake-up call to the stability of the currency. Holding gold also goes beyond just a store of value. It's sanction-proof and holds zero counterparty risk. And this is something Poland is also very concerned about as well. If you hold digital assets, it's money floating somewhere in the ether. It's just a digital record which is subject to a ton of risks. Like the Russian assets, it could get sanctioned away. Or if the financial system itself collapses, you can't access the money as well. The Bank of Poland clearly is concerned with this. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. It's very possible that going forward, more Eastern European countries will start buying gold to protect their assets. It's not a bright idea to place total trust in the Federal Reserve or the ECB. From 2013 to 2022, Hungary and Poland have been the biggest buyers of physical gold. Hungary increased their gold holdings by 3,000%, bringing their reserves from 3 tons to nearly 100. And this is a vote against the current system, and it won't be surprising if Eastern European countries continue to buy more volumes as well. Now, Singapore is a very interesting case here. We are the world's third largest gold buyer in 2023, with a total haul of over 75 tons last year. And remember what a central bank does is duties to protect the nation's sovereign assets. It's not about speculating in the markets, but preserving value. Now, gold doesn't pay an interest coupon, it simply protects against the eventual collapse of fiat currencies. Singapore's first finance minister saw the writing on the wall and the importance of stacking gold. The way money is managed in most states, the change has nearly always been for the worse. This would have to start with the collapse in 1971 of the Bretton Woods system of fixed exchange rate parities, the OPEC oil shocks, and the frightening problem of international debt. He knew a long time ago that the Bretton Woods system would eventually break, that America couldn't sustain the dollar's peg to gold. In other words, Singapore needs an inflation hedge outside of Western currencies. And when you buy gold, remember you are selling dollars away as well. It's money that's not going to go back into US treasuries, and in a sense, it's a form of de-dollarization as well. But that's just the central bank. Demand from local investors is also going strong. We can see the value of gold imports to Singapore rise from 13 billion in 2017 to almost 18 billion 5 years later. And when I go to my dealer or bank to buy gold, I have to wait at least 15 minutes to an hour to place my order. And that's how crazy things are. And if you stack on the other perks, gold demand in Singapore isn't going to disappear. There's no capital gains tax here, no sales tax, and gold premiums are around 3 to 4% above spot at most. That's what most dealers charge, right? Much less than many parts in the world. China's physical premium has risen to $120 per ounce before, and that isn't even counting in the dealer's profit. It can reach 8 to 10% easily in Shanghai if you're unlucky. And many people don't know this. It's actually much cheaper to buy gold here. And there's also another reason why a lot of people in Singapore buy gold as well, because it's a better way to store value than the local stock market. It's a disaster there. Since 2008, the index here, the STI, went absolutely nowhere. It has been bouncing around $3 for over 15 years. Even if you throw in the annual dividends of 2 to 3%, it still trails gold by a huge margin. You're still losing a lot to inflation. So options here are limited as well. And that's why gold demand in Singapore isn't going to vanish. It will remain strong. But is this the best time to buy gold now? Now, I believe that prices will trend higher over time. Barring a financial collapse or recession, it's hard to see gold prices going below 1800 or 1900, right? That train has left the station. And we know in 2024, the Federal Reserve, they are going to lower interest rates. And if the economy doesn't come crashing down, that is going to spur a big exodus of money out of bonds into other assets. As it stands, there's over $6 trillion in money market funds today, and that is liquidity just sitting on the sidelines earning 5% a year. And what happens when the yields start to drop? When the Federal Reserve starts cutting rates, short-term yields will start to crash. You will go down to 4% or even 3%. This will make the cash leave the treasury markets and head elsewhere to chase yield. And I'm quite sure a generous portion of this money will flow into gold. So I'm still buying gold, guys, at least once a quarter. Nothing fundamentally has changed. The end game is still inflation. But let me know what you think. Will gold continue to soar into 2024? And are you buying more today? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.